The markets are rattled. Headlines are turning negative. Indexes are sliding. But here's the twist: while the crowd is rushing for the exits, the sharp, strategic investors, the smart money are quietly stepping in. They're not making random bets. They're positioning themselves for what could be one of the biggest wealth shifts of this decade. Today, we're going to break down 4 AI-related stocks that aren't just holding up in this volatility, they're pushing higher. Each one plays a crucial role in the AI ecosystem, from the software we talk to the chips that power AI, to the raw materials that make it all possible. This discussion is for informational purposes only, it's not investment advice. Always do your own homework before making financial decisions. First up, SoundHound AI. This company has been on a strong run lately. Just before their latest earnings report, the outlook shifted from neutral to bullish, and that call has paid off. Key numbers. So, what's their edge? Think of a voice assistant like Siri or Alexa, but more natural and conversational. SoundHound's AI doesn't need exact phrasing, it understands the way people actually speak. It's already used in cars, quick service restaurants, banks, and call centers, cutting labor costs and speeding up service. Industry forecasts say the AI voice recognition market could nearly double by 2030, from $8.6 billion to $15.9 billion. Once a client integrates SoundHound's system, it often becomes a recurring revenue stream. The caution: the stock trades at roughly 38 times this year's projected sales, pricey. Margins are still modest, and the stock is volatile. Technically, it's sitting above key moving averages, with resistance in the $15–16 range. A breakout could lead to $17–18 in the near term and potentially $20–25 over the next year. Next is Nebius Group, a spin-off from Yandex's international operations that now calls Amsterdam home. Their focus is building full-stack AI infrastructure, GPU clusters, specialized data centers, developer tools, and industry-specific AI services like autonomous vehicles and education tech. Q2 results. They also secured $700 million from investors including Nvidia and Intel, giving them both funding and better access to the GPUs that are in short supply. The stock is up 145% year-to-date, with one of the highest relative strength ratings in the market. This is an early-stage company with big growth potential, and equally big swings in price. Then there's Micron Technology, a company right in the sweet spot of the semiconductor cycle. They recently boosted their fiscal fourth quarter outlook to $11.2 billion in revenue, with expected earnings of $2.85 per share, up from $2.50. Gross margins rose to 44.5%, thanks to stronger DRAM pricing and tight supplies of high-bandwidth memory HBM, which is essential for running advanced AI processors. Micron isn't just riding AI's growth, they're supplying a core component of it. With AI adoption expected to ramp up over the next couple of years, demand for this kind of memory should keep climbing. On top of that, they're backed by a $200 billion US investment initiative in domestic chip manufacturing and R&D, giving them a strategic edge. At about 15 times forward earnings and with analysts projecting 600% year-over-year earnings growth, Micron offers AI exposure without the extreme volatility of smaller names. Technically, MU has been trending upwards since May and is approaching resistance around $123, $125. A clean breakout could open the door to $135, $140, prices the stock hasn't seen in more than 2 decades. Finally, MP Materials, a US-based producer of rare earth minerals. These are critical for making advanced magnets used in EVs, wind turbines, defense systems, and AI hardware. Q2 performance, but the real story here is strategic positioning. The US Department of Defense is now MP's largest shareholder, putting in $400 million in equity, plus extra staged funding and a $150 million loan for its new magnet facility. Apple has committed $500 million to secure a domestic magnet supply. The stock is up 350% year-to-date. If it holds above $80, the next leg could carry it to $90, $100. This is both a commercial growth story and a national security play. From the voice software that interacts with customers, to the cloud systems that process AI, to the memory that fuels those systems, to the minerals that make the hardware possible. These 4 companies cover every layer of the AI value chain. Each has its own risk-reward profile, but all are positioned to benefit from AI's rapid growth. The AI era isn't just coming, it's here. The question is whether you'll be watching from the sidelines or taking part in it.